South African investors have a few BEE shares schemes to choose from. While as we discuss the performance of these shares, Riaz Gardee, who's a market commentator and BEE analyst, joins us now for more. Riaz, I got taken by BEE shares a couple of years back with the launch of Phuthuma Nathi. But when you look at the recent company results that have been published recently, the likes of Sasol, Vodacom, as well as MTN, their BEE shares also corresponding, and the share price is actually reaching new all-time highs.
Hang on. You got taken. What does that mean, you got taken?
I got consumed and interested by, you know, BEE shares and yes, I did.
But you didn't get taken. You made money out of it, sure.
Well, Alec, back to the question. Yeah.
you got involved in the market.
I did, and it's an exciting market and a very interesting one, and one that we need to be more vocal about, actually.
But you're married now, so don't. Because the guys are listening to this thinking, who's got all these shares that have gone up? Hello.
So they should follow me with stock picks, huh?
Of course they should.
Exactly.
And Riaz.
Thanks, Gugu. No, I think that's a good point that you made. Remember, the underlying shares are in essence what you own. So that should track the BEE shares, and especially where there's leverage, that will be magnified as well. So that's the main reason those shares have gone up so much. And exactly as you mentioned, Sasol and MTN had recently announced good results, and that obviously you know, had an impact on their underlying price, which is at all-time highs close to, and that transpired down to the other shares as well.
Fairly positive dividends were also paid out at both Sasol and MTN, but BEE shares also have a debt component.
Yeah, what will happen is the dividends that are paid will be paid to the SPVs, the BEE companies, which will use that to pay down their debt. So that will have a significant boost, especially since the dividends are much higher than initially anticipated. So the company should be debt-free quicker than initially thought, and that will just add value for the shareholders.
So it's got a leveraging effect then. If the dividend growth is higher, as you say, as it has been in this past year, then it makes those BEE shares even more valuable.
For the ones which are leveraged, and remember they're all not leveraged, so for example Sasol has two, one is leveraged and one is unleveraged, and you can see that movement between the two very clearly in terms of the leverage effect.
How so?
So the ones that are not leveraged, the Sasol BE1, which is listed on the JSE, they normally just trade 30% lower than the underlying share, because that's all they are. It's a restricted share. Whereas the Sasol Inzalo has a large amount of debt component. So that's trading at about 100 Rand now. But to give you an idea, if the Sasol price goes up by another 100 Rand, you know, they would go up by 100 Rand as well. So they would double up basically, whereas the other share wouldn't go up by the same proportion. So the leverage has a significant upside and downside.
What about Phuthuma Nathi?
Now I think Phuthuma Nathi is a different dynamics, because there's no trigger event in the terms of the shares unlocking. They need the license for the DSTV and the TV license. Therefore, they are having that license indefinitely, basically. So the scheme won't unwind at a particular point like the other ones, which have definite end dates. But nevertheless, you've got a underlying business, which is a South African business, which is a strong business, a lot of cash flows, not too much competition, it seems, and you know, a healthy customer base.
So you don't get the gearing effect or the discounts that you get on the other ones
as much.
But so Gugu's in a she's in a good stock.
I think it depends which one she's in, obviously.
Well, we will discuss those later maybe. But Alec, you mentioned Phuthuma Nathi, which is under Naspers.
Yes.
Another one that's under Naspers is Valco Mizani, and since that started trading in December last year, there hasn't been much movement in that share price.
I think again the underlying, you know, that's more the media assets of them. So the key rule of all of these transactions is what is the underlying entity that you're holding, and that will determine how you progress. So those ones are not the TV assets, they are the media assets, and that just has shown what's happened in the two industries basically.
So you'd much rather be in TV assets than media assets.
Of course, for more growth.
It's an instructive issue that you make there, because not all BEE shares are going to be worth, well, they're not all equal by a long way.
Correct, and I think the differences is the exit mechanism, the time to exit, as well as the gearing, and those will determine what the value is. And I think at the end of the day, you need to look at what you are buying, because there's no use buying something that seems cheap but you're not happy with the underlying product.
I'm happy that you mentioned that, because one cheap share, Alec, belongs under the Able umbrella, Aom Shaba and Somisa. That share price has been rather erratic, and I take it investors are confused as well as to what's happening with Able going forward.
And I think that's what's driven that, because they had a rights issue recently, and also there's significant uncertainty in that market segment. So that has then transpired down into the share as well. And exactly the other side of Sasol, you know, the one has gone up significantly, this has gone down significantly.
Offering value?
If you're confident in the industry, which is the microloan sector, and where they play, I think they've got a lot of issues they need to work through. They're getting there, but you know, it's a difficult industry in the sense that also the consumers are pressurized now, the interest rate environment, the fuel costs going up. So, you know, all of this impacts significantly on their ability to repay and the loans that they can take out.
Another one that a lot of people aren't familiar with is Ukamba, that's under Imperial Holdings.
Yes. I think what's happened there is the Imperial price has come down recently, primarily because of the interest rates. Remember, there are a lot in logistics, automotive, and that sector. So there's been, you know, with the interest rates going up and a decline in the economy, those shares have come down as well for that very reason. And I think there's not much growth expected for the next year in that sector of the market. So that's played into
Even
that.
with Mark Lamberti at the helm?
Well, I think you know, he'll do a fantastic job, but there's outside factors as well in terms of the consumers being able to buy, the interest rate environment, you know, the increases in all the costs you're facing.
So there is that relationship, despite the fact that Ukamba is a very cheap way into Imperial.
Correct.
If the Imperial main share price comes down, Ukamba will follow.
That's exactly what will happen.
And what about the discounts? Because to me, that's the most appealing issue about BEE shares. If you qualify, i.e. I don't qualify, the two of you qualify, to buy into these stocks, why would you even bother buying, say, MTN on the Johannesburg Stock Exchange when you can go to MTN Sekele?
I think that's a good analogy that you made. The only reason that you would buy the one from the other is if you don't have the time restrictions. So if you're not pressed for money and you can wait for 3 years, I mean, obviously you might as well buy Sekele. Just remember, in the other shares, the comparison is not directly as easy because, for example, in Vodacom, they only own Vodacom SA. So it's a part of the business, not Vodacom Group. And also in the other companies you mentioned, Phuthuma Nathi, it's not the whole of Naspers, it's certain divisions within those companies. So MTN Sekele is an anomaly where you've got the whole, you've got the whole group. And in that case, obviously you would rather buy the discounted one than the fully priced one.